All right, hey guys, here we go. It's Wednesday, time for another video. We're going to cover the usual suspects: crude oil, metals, the dollar, Nasdaq, through the lens of Elliott wave theory. Let's get right into it with the oil chart. So, oil, man, this thing right here keeps extending. We have already extended a couple times beyond where I was looking for regarding these measurements. There were a couple of clues that things were not exactly playing out as normal, or as to be expected, I should say, whatever normal is. In any case, keeping it very simple, I'm looking at the February contract of the futures in WTI crude oil. And what I was noticing is that price for the third time has come right into this zone. And this time we broke above it. So I'm tracking the log chart February futures contract. That's an important distinction, log versus linear. For the longer duration time frames, I tend to stick with log. I blink them back and forth between log and linear. That's another topic. In any case, the point is crude oil is breaking out. It has been breaking out. Got above this resistance, got through all of this resistance, and now has made a new high locally speaking. Also, we just had a contract change. Now this, I'm sticking on the February here, but on the 4-hour chart, I inadvertently had put it on the continuous contract. So it did just switch contracts. So price, the open just happened. So the price is already down here. So I need to redo this chart on the 4-hour. But the main point is we were approaching an alternative count, which is, since this wasn't the top here in this ratio box, locally, meaning the measurements from this low project rather well to this high. So, this high this high was not contained. So perhaps this next one will be contained. But the other idea is, it is possible anywhere in here the top could emerge. And what I want to point to, which I don't point to very often, are some technical considerations. Well, actually, on this chart already are see these green bubbles? These are volume bubbles. So oftentimes when you see these, they show up near a local top when they're small. Sometimes for the larger degree tops, they show up with the larger size. But what's been happening with crude oil, the last couple highs have, you get a local pullback after these bubbles. Sure, actually each one of these bubbles represents some kind of a pullback. It's just that they're not sticking. So, perhaps we get a local pullback here and one more shove higher. But am I trading just based on these bubbles? No. Here's another thing I want to show you. Let me get rid of the SAR dots just to make the chart a little cleaner. Look at the technicals, the more traditional technicals. This is a momentum tool, the squeeze tool, but a standard divergence, a negative divergence, just means that technical indicators are showing you a lower high. Okay, so technical on the MACD, it's a lower high. On the RSI oscillator, it's a lower high. On the momentum tool, it's a lower high, while price makes a higher high. So that is a very standard definition of a negative divergence. So that would suggest that we could see at least a local pullback. And here, now this chart is the February chart on a much lower time frame, 55-minute time frame. Let me just glance at these technicals. I don't have a divergence here. What I do see here is continued upside momentum. Now here you just have a basic pullback on the MACD. Let me blow this up a little bit just so I can kind of see. I want to just take a look to see what kind of divergence, if any. And there isn't one. So the lower time frames just show the extreme strength of this move. And the way I would view this RSI oscillator is when it goes way up to the top here and then goes flatline. That's an embedded technical. You could argue the same thing happened over here in this massive extension in what I think is a wave 3. Look how the technicals just get pegged to the ceiling. See how the technicals right here are going flat across? while price just shoots up. That's an example of an embedded technical. And then here, look at that top. And then actually this whole thing, as these technicals were coming back, all they did was reset while price consolidated, while these technicals just reset. And then price got another massive extension. Now, this is only a 1 hour chart. I am seeing these volume bubbles, and all that means is on these candles, each one of these candles has adjusted using an average compared to the neighboring candles, that these candles have way more buying volume. Now, just for grins, let me just move up in time frame. Let me look at the 144 chart. I like to look at that. So yeah, you got more bubbles showing up there, just meaning traders love to buy the tops. They don't mean to do it, but I see this quite often, and that's why I use this tool. When you see bubbles of at least that, call it the medium size. I have small, medium, large based on thresholds. So, they often mark a local top at least. So you can see that this marked the top in the past, not so much here. But if you're a scalper day trader like me, and by the way, before the close, I did put on another short. I have a small position lower, and then I put on another position up here, almost near the top again. So we'll just see what happens. Let me just go one more. Let me look at a 2 hour. Well, that's 2 hours less than 144. But you get the point. Let's look at a 4 hour on this contract. You can see that there's just massive amounts of buying up here. And then the price corrects. And then it comes up, and then there's another round of massive buying up here. So really what I'm showing you is that may or may not be helpful. I mean, if you're not in a trade already in crude oil, I wouldn't necessarily take one. I'd wait. Okay, now on this 4 hour chart of the that's the continuous. So let me put the ratio box. Let me clean up this chart real quick. You're going to watch me do a little homework just right in front of your face. You're going to watch me. What I want to do, and this chart is so cluttered up because it's not really meant to be a 4 hour chart. So I've got all this homework on the lower time frames. But all I want to do is put it, you know what? Never mind. This chart is not the right chart. Let me just forget it. The contract switch got me a little screwed up. So just to keep it uber simple, because this is the February contract, I'm going to change this by the next video, which will be Sunday's video. I'll be on the March contract. But hey, we're still on the February contract. These levels are still on the February contract. So the idea is these yellow fibs represent a potential C wave top, which is what I'm looking for. So, and at the moment, the way that opened, we opened lower on the February contract. And now I'm just curious. Let me drill down to a lower time frame. This doesn't show any gap down. I'm not sure if it gapped down or not. All I'm doing is zooming in to just see what is really going on right here. So, typically after the 6 o'clock open, there's no fireworks. Typically, it's just flat line until 8 or 9 p.m. Eastern Standard Time. So let's just see if this can get any kind of pullback at all. There are so many downside targets because of this massive extension. There are all kinds of candles that left a lot of buyers behind. Let's just, for example, when you look at a 4 hour chart and you see a giant candle like this that has not even been anything close to being retraced, we consider that an area of potential liquidity, which just means they're going to come back for that. So that's one area right there. Here, there's still some liquidity in here. There's definitely liquidity in these 4 hour. I mean, this is 2 4 hour candles. I mean, this is a massive extension. So, just to give you an idea of how big that extension is, typically in a standard 5-wave impulse, which is like 1, 2, 3, 4, 5, you get to the 200 fib roughly But this is an extension to 382, and then now you're extended even again to the 2618. So actually, now that I'm on this 4-hour chart in the February contract, let me just show you a super quick and dirty ratio type of idea for, I'm going to do a local version. So if this is the 1, 2, 3, 4, and then this is a wave 5 extension, which in commodities, wave 5 can extend beyond anything reasonable, like what you would consider standard extension. So I'm going to measure this as if this is, sorry, let me try this again. I'm going to measure this just based on this. If this is wave 5 and this is the bottom of wave 5, if this is the 3 of wave 5 and this is the 4 of wave 5, I just want to see where might a ratio box suggest the topping could be. So there you go. So 81.39 to 82.40. 82. Let me just get this exactly on there. So 77.24 is that low. So let me get this thing right on there. All right. So 81.39 to 82.40. This would be a standard, just based on this leg of the move. If this is the wave 5th extension, which, this whole thing is already wildly extended, but this would be another shot. Now you can see this was the original ratio box I had for the entire structure, meaning 1, 2, 3, 4, 5. But this thing is already extended above that, which means, honestly, it could top at any moment up here, especially with the negative divergence seen on these technicals. I mean, this is a negative divergence on every single one of these 4 technical indicators. The MACD, the RSI, and the RSI oscillator. Doesn't mean that price can't keep going higher. If it really wants to extend much further than this, then it's just not a C wave anymore. What it would be considered is a new impulse, and that we're going to go all the way up to this, call it 84, 83. My God, that's like $4.50 higher than current price for a wave 3. Like if we were in the middle, and I've seen this show before on Elliott Wave, it's, because this is a C of B. So really the question is it a B wave or is it a wave 3? And the way it could be a wave 3 is that this is really a wave 2, not a B wave bottom, and that this C wave is not really a C wave. This is really the heart of a third wave. Geez, that's a huge miss based on Elliott Wave, but there's still some indication that this may be a topping region. Okay, enough on crude. Dang, I really went way too long on crude, but there's just a lot to talk about on crude. Let's go to the dollar. Now, the weekly chart on the DXY, as you know, anywhere, as I've been saying for 5 weeks, 6 weeks, this yellow box is where you could reasonably expect this corrective wave to terminate. And we extended a bit, and now we're getting rejected, and we have this down motion right here now, right? Well, it needs to get down below. It really needs to break structure. So we can't really see the details of the structure on this weekly DXY chart, but it is clearly in the box. It has extended a bit. This wave, there is a way to count this. We're going to drop down now to a much lower time frame and look at some of the internal wave structure. But the idea is that was the top of a wave 3, and this is a very normal looking A, B with a C wave yet to come. Catching support where you would expect just initially until we get more price action. I'm just going to put this as a standard box. I'm going to put that here. It's the 382 to the 50% fib, which is a standard target for a wave 4. And that's what I think we're in right now. And by the way, one of the hallmarks of wave 4 is overlapping variable nature of the wave structure. And this is overlapping and this is variable. There's nothing internally in here that measures like really well. in and of itself at this scale. But if I count this as an A with a B wave bounce, then yeah, this very much looks like a B wave in the sense that it's variable, it's crisscrossing, it's overlapping itself. B waves are torturous and cruel in general. So, and Fibonacci wise, this is where you would expect to see a B wave, is to get up above the 618 very typically, not a rule, but as far as guidelines go, the 618 to the 886, usually from my experience, depending on what instrument you're tracking, the 764 to the 886 is a more commonly seen target for a B wave. But we measure internally on this wave to try to dial it in. Where might the top be? So that is what brings me to the 1 hour chart. Now, this is much lower time frame than what we were just looking at. But this ratio box is what I put on the chart, thinking if this entire wave is just going to be done as a C wave, C of B, then the top should be somewhere around here. Well, guess what? It came right up to the top of that zone. It got rejected. And then now I've measured this a bunch of different ways. It's definitely a couple different ways I can measure this. So I'm going to keep it really simple and just say that this is impulsive looking, meaning we have these massive moves down and then which are impulsive on the lower time frames, which just means they look like they have an internal wave 3. So there are a couple internal wave 3s, which just has me thinking this is an impulse to the downside. So even though I don't have a really clear handle yet on the internal structure, there's no denying that the dollar just came down quite a bit from a zone that I was looking for as a topping zone, which is why I put this label the high with a question mark, because it's not like I'm going to ever state with certainty like this is the high. But we deal in a field of probabilities, and based on this internal structure, which I use combination of the structure of price itself and Fibonacci, those two things together produce a very nice looking 5-wave structure for the 5th wave of C. This is the 5th wave of 5 of C. And then now we got rejected in a manner that can best be viewed as impulsive to the downside. So, hey, it's possible the dollar topped. But if you really want to know the dollar top, you want to just let more price action unfold. And the way the metals are responding, it's, let's get to that, by the way. So let's leave it at that for the dollar. For parameters wise, if the dollar has actually topped, it's very unlikely it's going to come back above 109.755. Why do I say that? Because a standard correction for a wave 2, and I'm not saying that that's what this is, but just an overall correction of the entire structure. Let's go look at where the 50% and the 618 come in. So if this is 5 down to here, and this is getting a wave 2 bounce, the 618 is still below this level. So, just actually, let me clean that. I don't want to spend too much time doing homework on a video like this for you guys, but I'll just leave it at that. This is a parameter, 109, but I want to put a marker there. Okay, 109, and I just want to get rid of that 0, just cleaning up my chart. Usually I do this before the video, but didn't get to it. So anyway, that's a bit of a ceiling, and then this is an obvious bit of a floor, the way I'm counting this. And that's if this is a 1, 2, 3, 4, 5, and then a wave 2. But I really don't like that. I like this better as a wave 4, and that this is a wave 5. But the problem with that is then it did this massive move down and then came right back up again. So I'm not going to get into the academics and turn this into, I'm not interested in being an Elliott wave historian, an Elliott wave scholar. I'm just more interested in trading. So I'm just giving you basic parameters. Okay. In fact, even if I get rid of that, to keep it really simple, this is the floor. This is the ceiling. And actually, this is another area that I viewed as important on the way up. So let's see how price behaves. My thinking is it's not going to come up and make a new high, and then it's actually going to break this. But let's see how it does it. And eventually, I'll get a better handle on the fibs. But so for the moment, it's possible that the dollar has topped. We'll know. I think we're going to know soon. It's only Wednesday. So yeah, I think we're going to know by the end of the week, is the top really in or not? And this is the region that's going to decide that. All right, so that's the dollar. Now let's hop over to gold. Similar thing. Gold has made 3 up. All right. Gold has made 3 up. If you really want to be bullish in gold, this needs to complete a 5-wave structure up. And I know it looks bullish and all this, but we are still below the previous 3 highs. I mean, locally speaking, 1, 2, 3. So even though there's a potential for gold to be a diagonal, because the wave 4 has already overlapped the top of, I'm sorry, my charts are so busy. Haven't had time to turn off all this stuff, which I usually do, just to simply give you levels. In any case, gold, it's certainly locally bullish. There's no denying, okay, that at all. And if this is a diagonal, it needs a 5th wave. If this is a diagonal, the 1618, which is right here, is not an unreasonable target for a 5th wave. It's also possible to get a weak 5th wave that doesn't make it there before it reverses. But if this thing makes it from here directly without making a new low down into this area and comes all the way up and gets to at least the 2757 level, ideally it comes further up, then maybe wave 4 is done. And really what I'm getting at is this wave 4, I've been saying for many weeks now, needs to come further down. It needs to get lower, and it needs to burn more time off the clock. So, sorry, I'm just trying to clean up this chart. So, it's burned more time off the clock. Yes, that's for sure. It has burned more time off the clock, but it has not made a net lower low over where I have that A wave. Now, this is getting a little academic again. So just as far as parameters, I mean, can this inch its way up a little higher? Sure. But if it gets above the 1382, if it just comes up again, this structure is horrible. This does not look like where you would find a bottom. But hey, man, it's metals. If the dollar is really topped and the dollar's coming down like meaningfully and continues to drop, yeah, I mean, the 236 is the minimum target for wave 4 guideline wise. So this did get into the minimum target of wave 4. You could argue this did come down in 3 waves, but this is, I like it better as an A wave. And look at this structure. What in the world kind of a structure is this if this is the low? That is the other reason I like it better if it comes down and burns more time off the clock and gets deeper into this blue area, at least to 2,500. That would be my preference based on my experience with Elliott wave. But look, I'm not stuck on anything. So, if this comes up, it makes a new high. I'll measure all this internal stuff, but I don't want to get into that for the purpose of this video, but I use a combination of Fibonacci and internal wave structure in the context of this larger time frame to glean clues. So even if this comes up higher, it doesn't hard for me to buy into the idea that gold is getting its 5th wave, which is going to come up much higher. So for now, honestly, I'm not trading gold as much, and I've been trading the Nasdaq. Last week, it was really more about the Nasdaq. I did trade some gold. I had some good gold scalps, but believe it or not, I did much better. I had some amazing trades on the Nasdaq. So gold, I'm just leaving it alone. Maybe I'll do some scalps during the week. If you're inside the club, you see me doing that. What club am I talking about? I'm talking about the Professor Trades Club. By the way, if you're getting value out of these videos, you got to join the club. For a little bit more than $1 a day, you get Armando and you get the Elliott wave guidance every day in the room. So if you're getting value, smash the like button. By the way, if you're getting value, hit the subscription button, hit the notification bell so you'll be notified when I make these videos. But the real action is happening inside the club. And I can't tell you how happy it makes me when I see people joining the club and joining the Elliott wave room and then having some success and following Armando and myself and getting better trades, getting some consistency. So the link to the club is in the description of this video. All right, let's get back to the chart. And I don't have anything much conclusive to say about gold right here. other than this parameter that if it wants to break out and come up into here, that's going to go a long way towards this being a legit fifth wave. And I suppose it can still be, a fifth wave of C of a B. Now, this used to drive me crazy about Elliott wave before I really had more experience, is Elliott wave guys just move the label over. But they're not just moving the label over. It's about what's happening here and the internal measurements that allow an Elliott wave guy to change his count. It's a dynamic methodology, meaning it changes as price action changes and you get more price information. So I know people just want me to put a chart on and say, this is where price is going and it's fixed and it's a guarantee. And it's like, I know something that nobody else knows. And somehow you can just blindly take my trades and you're going to make a bunch of money. It just doesn't go like that. It doesn't work like that for anybody. Anybody that's telling you the truth will tell you they don't know what's really going to happen. Okay. Nobody knows. So I may have to move this label over, but let's give it some more price action. Let's give it some more time. Okay. Look at silver. I mean, the dollar may have topped and crapped out, and this come down, held this support area, and is bouncing like crazy. The thing I don't like about this structure that I just relayed to you about gold is if this is a 1-2, which is what you would be looking for if you're bullish silver, you're looking for this to be a 1, 2, 3, 4, but the 4 broke the level of wave 1. So if you're an Elliott wave guy, that's one of the few hard and fast rules making this. It has to be a diagonal for wave 5. Can wave 5 shape up as a diagonal? Well, yeah. This would be wave 1 of wave 5. If this doesn't come back down here and make a new low and gets up into this ratio box, which is the next logical fib, because if this is wave 3, let me see here. Yeah, if this is 1, 2, 3, or you could actually, if it's a diagonal, you could also argue that this is 1, 2, 3, 4, actually 3, 4, 5, and this is actually a 1, 2. Yeah, actually, I just noticed that it's possible this could be a 1, 2. So listen, I have not put in the homework on these metals because I've been watching a lot of other instruments lately. But now that I'm looking at this, it just confirms that I'm doing the right thing by staying out of the uncertainty. I know when you look at this bullishness, you're like, man, Brad, you should have caught that. Well, no, I'm not going to catch every move. When there's something is very uncertain, I'm going to go with what I think is a more highly probable trade. And unusually, that's been the Nasdaq for me. I could take the rest of the month off after what just happened last week and this week in the Nasdaq. If you've been with me in the club, you know what I'm talking about because I'm posting those trades. So I haven't been trading the metals as much. I've caught a couple of scalps. I actually short gold, which is beautiful. Caught this move. What day was that? Monday. So I'm susceptible to scalping on the lower time frames, but I'm trying to give you guidance on these longer time frames of metals, and it's just I don't feel confident with this because it could be too many things. It could be a 1 already in a diagonal, or it could be a 3, 4 with another 5 coming in a diagonal. There's nothing other than a diagonal though here. There's no other way to count it because it's overlapping itself, and that makes it less likely to follow through the way I'm looking. So the ideal thing is the larger structure, which is giving you better odds. All right, so Nasdaq, very, very, very interesting. Caught a lot of this action in here. Got extremely lucky. Now, what's not luck is I put on a long trade this morning right in here. That's not luck. That's based on technicals and where this is at in structure and the fact that it already came up here and got rejected. This is where the gap was, way over here. And look how price, it remembers. Price has memory. So it comes down. I'm sorry, my charts are so busy. It's just that I didn't prepare. I didn't have the time to prepare like I normally do for these videos. But anyway, so here's the deal. So price remembers these levels, man. That's why I sometimes drag a level over. Boom, rejection. Came all the way back up again. Got rejected a little bit, fell asleep. But then this morning, I'm like, it already did all this. It already wiped out all the longs over here. And then all these people are probably shorting over here now. And then I put a long here, and within I don't know how many, it wasn't very many minutes. I don't know, maybe it was an hour later. I took it all off. Should have, and I put it in the room. I'm done for the day. No new trades, just initiating. I actually went back on that idea when I took the short on gold, but so I took it all off and I'm done. So, the way I'm viewing this is, yeah, it's got a few more targets up here, but overall, this is going to have to do something dramatic to prove to me that this is not some kind of an impulse to the downside. So we'll find out though, because it's in a box right now where you would expect to see some kind of a reversal. And you can see I haven't even moved these labels because I just haven't done enough homework yet. But this 1382, it wicked above there. And sometimes a B wave can play out as a three-wave move. The B waves are variable, so it's difficult to discern. But at this larger degree idea, it's possible this is a corrective bounce. It's possible that this is an impulse down and that we got a corrective bounce and that we're going to continue to go lower. That the wave 3 down here is playing out as a three-wave move, A, B, C. That's really the idea here, is that we're heading, there's some kind of a downward action happening, and it's doing so as a diagonal, and that this wave 3 is playing out as a three-wave move. But given the height of this move already, it's possible, not giving you great guidance today in this video, because I normally like to give you very clear parameters, but I'm just giving you like uncertain parameters. So, in spite of that, if you're in the club, you don't have to know what's really happening on these longer time frames. You can dial in with us. There's a bunch of other members inside the Professor Trades Club, and including we're getting signals from the professor as well, Armando. So listen, if you come in the club and get your psychology right, you can catch a trade like I did this morning. You can catch these trades. You don't have to know exactly and understand exactly what's going on with Elliott wave. It's a complex methodology. It's very good at showing us parameters. Here's an example. The sell box that goes on there. Well, what happened after that? Or this ratio box, for example. And now we're in a B wave box. So we were getting some rejection. And even this box held where you would think a B wave would hold. So, even though I'm a little tired and I'm a little cranky because I'm not getting a lot of very clear parameters like I like to present to you guys. But there are some ideas here. And if you're inside the club, you're going to get all the nano stuff that we're posting. So, here is the nano on the Nasdaq. So the best way I could think of this is a C wave, and this is the 3-4, and we're getting the final move up. Maybe it already topped. So, if you want to keep it really simple, this is the resistance up here for sure. So if this is going to come up in here, be very careful if you're long. Otherwise, I think we're coming back down. All right. So that's the deal. What was there one other trade was it the UJ that I took? Yeah, it was the UJ. So the weekly of the UJ, naturally, if the dollar is going to come down, this pair is going to come down. Naturally. And this is the area where you would expect a B wave top. That's why I put that label on there quite a while ago. Suggesting, hey, this is the area where you might see a C of B top. Look what happened. Massive move down. And then we now have this move up, which came up pretty high. Still could be a wave two because it predominantly looks like three waves. If I dial it in on the lower structure, now you can really see the trade. And I would call this an initiation move down. And then as it bounced off of the support, I went short. And now, by the way, in the Professor Trades Club, the professor also, and I love it when this happened, he also saw a short opportunity. So he guided the entire membership into a short trade if that's what you wanted to do, if that's what you're into. So as of right now, on this lower time frame, we are in the money. We shorted, one entry was 156.9 something. I think it was 156.909 if I'm not mistaken. But that was the entry. And now we came down below what I'm calling this pivot, and then we back tested the pivot, which is fantastic. So we didn't make a new high. And then now we're moving lower. So the way I do it with currencies and Forex in general is I stay real small when I'm going for a swing trade, because I am swing trading this here. So I put a small position on, and I like it unless it comes all the way back up above this level, up in here. If you're inside the club, you're going to get guidance throughout the week, pretty much on a daily basis on these lower time frames. But I'm just sharing this with you. If you're watching this on YouTube, you're getting a trade idea right here, which is small size, very small size, because it may come back up. There is a potential for it to come back up. So I'm going to stay small size. And what my plan is, if this can create on a larger time frame follow through on this little initiation move down, because this is not really enough to throw in, go crazy and throw in the kitchen sink. But what I want to see, for example, what I may do is scalp within the swing trade. And the real entry that I will put on a larger position and then leave it alone for hopefully a long time is wait for 5 waves down legit. The way I'm looking at this right now is 1, 2. If this can keep coming down and get into this zone down here before it bounces somewhere down right in this zone, and not come back up too far above this area. I mean, I would expect it to find support somewhere down here. I would expect it to reverse and come up into here where I will add some more. Maybe I'll take off some of my short position down here. I almost always take off gains at a 1618. Almost always. In this case, I would, because this does look impulsive to the downside. So the idea would be, this is an Elliott wave. This is how you trade Elliott wave. Take off half the gains. If this thing bounces back up in here, I'll put them back on in probably another position. So now I have 3 positions short, expecting it to come down. And we'll use the ratio box. We'll dial in measurements. And then I will take probably all of it off. Because once you get 5 down in an impulsive manner, you can expect a retrace to come back up, something along the 618 idea, right? And then what I'll do is layer back into shorts on the way up. And the way I do that, and I'll be sharing this in the room. If this chart plays out the way I'm thinking of it, this is going to be a great example of how to trade Elliott wave. So the idea would be, when it comes back up, I'll add layer 1, small size again, layer 2, heavier, layer 3, heavier, and then if it's still acting corrective and it keeps coming higher, I will put a larger even larger fourth position, and then wait for it to come back down. And anyway, that's the deal. So let me not get carried away. A lot of things have to happen before we get into that. So there you go. That is the UJ. And the reason for this trade is the longer time frame being in an area that you could expect a top, combined with the fact that the dollar is in an area that you could expect a more lasting top, combined with the fact that the dollar has begun what I think is an impulsive move down. So we'll see. All right, guys. Man, listen, this was not my greatest video. I appreciate you guys watching. I really do. If you're finding value here, give me a thumbs up. Hit the subscription button so you'll be notified. And do yourself a favor. If this is the 3rd or 4th video you've watched, maybe you're finding value. Now's the time. For a little more than $1 a day, you can join the Professor Trades Club. The link is below. Thank you, guys. And we'll look forward to seeing you on the next video, which is probably Sunday. And for my members inside of the club, thank you. I will see you inside of the room. We'll do it all again and end the week on a great positive note. If I don't make another trade the rest of the week, it's been a fantastic week just off of my one Nasdaq trade. So I'm going to take it easy, staying small. That's the one thing that has helped me the most, staying small size. It's about consistency and longevity. No more trying to conquer the world in a day. Forget that. Consistency. Small gains consistently. Less screen time. Cool. All right, guys. See you on the next one. Bye-bye.